Okay, hello everyone, and thank you for joining. My name is Michael Downey, and as host of today's session, I'm pleased to welcome you to today's AWRI webinar. Today's presentation is State of Play, Australian Wine in Global Context. To tell us more about this topic, we're fortunate to have with us Mark Rowley, a Senior Analyst at Wine Australia. Mark has been with Wine Australia in the Market Insights team for 9 years, bringing together a background in viticulture and economics education. Mark's role involves using data to provide commentary and recommendations to Australian wineries to help them make better decisions. Now, if you'd like to join today's conversation, we'd love to hear from you. Please open the Q&A section of the webinar, type in your question and click to send. Feel free to send through your questions at any stage, and once we get to the Q&A section of the webinar, Mark will address any questions you have. If you'd like to get involved through Twitter, please use the Twitter handle @_AWRI. As always, the webinar is being recorded and will be available to you later this afternoon from the AWRI's YouTube channel. I would also like to take a moment to thank and acknowledge Wine Australia for providing funding and support for AWRI webinars. Just quickly, for those that are just joining us, welcome. The topic for today is State of Play in Australian Wine in a Global Context. And I'm going to hand over now to our speaker, Mark Rowley, to start the conversation.
Thank you, Michael. It's great to be back at Wait for another webinar, this time talking about Australian wine in a global context. This is it's a huge wine market out there, so I will go through a lot of this quite fast, but if you've got questions, send them in and I'll try and explain a little bit further. So Australia does compete in a global alcohol beverage market. We are up against other beverages and other wine producing countries. We've got numerous challenges to overcome, and a lot of those challenges over the previous couple of years are now turning into tailwinds. There's a lot of opportunity out there as well though, and around the globe we see numerous trends that are conducive to wine consumption, and Australia is really starting to capitalise on those. The other thing to remember, we do need to have a coordinated effort, especially when it comes to marketing and keeping a consistent message. So we'll basically go through a global situation, look at some of the macro level factors affecting the wine market, then we'll waterfall it down into Australian supply and demand, and then look at a few of the key markets, and then a summary at the end. So one of those macroeconomic factors that is really impactful on the wine industry is exchange rates. This is an interesting little chart I pulled together yesterday. And we're used to looking at the Australian dollar in the context of the US dollar. We know that we've had a depreciating currency over the last 5 years with a bit of appreciation over the last year or two. But this flips it around and has a look at how that compares in our key markets and also against our key competitors, and both are equally important. If you look at the blue chart, blue line, you can see that since 2010, Australia's roughly been appreciating against our competitors. So this is weighted for 50% towards the euro, who are our key competitors, they're around 10-15% for US, and also those other currencies such as South Africa, Chile and Argentina. And these wines are actually becoming more competitive compared to ours. If you look at the market weighted index, who's got more of a weighting towards the British pound, US dollar and the Chinese yuan, you can see that we are much lower. So Australian wine in those countries is actually cheaper than it was 5 years ago if we are looking at exchange rates alone. And this is a bit of a thought exercise to demonstrate how much of an impact the exchange rates potentially can have. And this analysis is really about hitting a retail price in US dollars and looking at what FOB theoretical Australian winery could achieve. So for instance, back in 2011, for an Australian wine to reach $15 US, in market, the winery may have been able to send that wine over for about $7.50 per litre FOB. That's now increased to more like 10 or 12 per litre FOB once you factor in all of those other margins and taxes. Obviously, in real life, this is not exactly how it works. Retailers know exactly what's happening with exchange rates, and they're going to want to keep some of that margin for themselves. What this often means is that it really opens up new business. So it may not mean that a product can appreciate in price, but as the Australian dollar depreciates, it opens up new segments for the wines that are at those price points already. As I said, Australia is really, or wine in general, is competing against other alcoholic beverages and in some instances other non-alcoholic beverages as well. And the key point with this map of the world is that wine isn't particularly the fastest growing category in the world right now. Most of our major markets, cider is in fact the fastest growing category. So in North America, you can see cider the fastest growing, and the blue part of the chart, the pie chart, is beer. So you also notice that beer is one of the main consumption categories there. Only India is showing fastest growth for wine at this stage. Probably is important to remember that cider is coming off a lower base as well. This really has implications for different styles of wine. Cider in particular is going to go up against whites more often, Moscatos, etc. So may not impact the red wine market to the same extent as whites. And at a global level, you can see that beer is declining over the last, in 2015. And cider again showing that fastest growth, but tapering off a little bit, and strong growth for RTDs, and wine showing a little bit of growth in 2015, but only about 1 to 2%. And if you look across the globe, generally speaking, the whole alcohol beverage category is down, predominantly due to aging populations and some of the health trends and taxes associated with those issues as well. Turning to global supply and demand balance for wine, and this chart is from the IRV. It shows total demand or sales in the orange line, and in the green line it shows total supply of wine. From 2004 through to 2012, you can see a general convergence between the two lines, and global wine markets were starting to tighten up. This is predominantly due to large vineyard removals in Europe, so 270,000 hectares removed since 2008. And if to put that into some kind of context, that's double the vineyard area that Australia has in the ground. As we know, Australia also reduced the vineyard area, but at 30,000 hectares, it really wasn't much in comparison. The other thing to note with these subsidies that were paid to remove vines is that some of those funds were going into improving efficiencies in the existing or the vineyards that were left. And this, we think, has gone to increase some of the yields, particularly in Spain, where they've moved towards more irrigation and trellising. If we look at 2013 in particular, you can see a huge spike in supply, and this mainly come out of Spain. Their extra production through that year was roughly equal to what Australia produces in any one year, and this really is reverberated around global wine markets for the next 2 or 3 years. Interestingly, they shipped out 40% more wine during the year, but they actually received less revenue. So it's a good example of how much impact this excess supply can actually have. 2016, it's predicted by the IRV that, again, there'll be some convergence between supply and demand. And if we look towards 2017, things could be really starting to get interesting as some of these competitor countries have been having a bit of a hard time this year. Again, a little bit more context around this is 2016 wine production, and you can see Australia was up 5% during the year. Again, we'll be up in 2017 about 10%. But you can see that if you compare that to the 12% decline in France and a 34% decline in Argentina and 22% in Chile, that small gain in wine production was really a fraction of what occurred worldwide. And it just goes to show how connected the wine world is, and that we're really impacted by the global market, and that growth in production come at a pretty conducive time in a global context. Looking forward to the 2017 vintage, we know Australia's crush was up 5% to 1.93 million tonnes, yet it could be a record at this stage. Levy revenues will have the final say on that number. New Zealand was down 9% to 396,000 tonnes. Argentina was up a little bit, but as I mentioned in the previous slide, they were down quite significantly in the year before. Supply is quite tight in Argentina at the moment, and Chile's starting to supply some of that market and pulling out of China at the moment. Australia's actually shipping bulk wine into Argentina at the moment, just 120,000 litres, but more Australian wine has gone to Argentina in the last 4 months than has ever been shipped there in the previous 50 years. This year, Chile's also down and South Africa's also down as well. And turning to the Northern Hemisphere forecast, Cider put out a crush report, a crop warning, which has forecasted France to have a record low vintage, and Californian vintage to be roughly flat on last year. As I mentioned earlier, France, Italy, Spain, accounting for nearly half of global wine production, and some of their main production regions are looking at being down maybe 20-30%. So if this plays out as has been forecast, this can have very big reverberations around the world in terms of wine and the supply and demand balance. If we look at global wine sales, how they've been faring, you can see it's been a pretty steady upward trajectory over the last decade and a half. This is conflicting slightly to what the ORV's opinion on the world of global consumption is. This is coming from Euromonitor. The main highlight here is the impact of the austerity measures in China. So you can see 2012 consumption begins to taper off into 2014, but that volume growth has continued to grow. The other point to make here is that value growth has been running strongly ahead of volume growth over much of that period. And this is the impact of premiumisation throughout the world. Most countries, consumers are starting to spend a little bit more on wine, and this is having an impact at this high level. So if you look around the regions of the world who are consuming that wine, Western Europe is still the epicenter of wine consumption. This is down by a huge number from 40 years ago, and this decline in consumption is really why we're seeing the Europeans pick up their efforts in some of the key markets such as the UK, USA and China. As you can see, North America has been increasing at an average rate of 2% over the last 5 years, and Asia Pacific has really been the strongest area of growth, up by 4%. The other thing to remember in Asia Pacific is that this growth has really been driven by imported wine as opposed to that Chinese domestic wine production. Eastern Europe's also down, and the other regions of the world are really not having a huge impact on global wine markets. The important thing to remember here is that there are huge differences between consumption levels per capita. So Asia Pacific sitting around maybe 1.5 litres per head, and again, big differences between, for example, China and India. China about 1 litre per head, India sitting around 10 mils or about a teaspoon. North America, 10 litres per head, differences between Canada and USA, and Western Europe sitting around roughly between 20 to 30 litres per head. But as the populations age and some of the governments implement strict tax regimes, that level of consumption is really starting to decline. Australia ranks 5th in terms of global exports, and for the main part, this chart is really in line with production levels. You can see Spain, Italy, and France are the main wine producers in the world, and the main exporters. Chile and Australia usually fight it out for 4th and 5th spot, but really the anomaly here is the United States. They're the 4th biggest wine producer, but they're only the 7th largest wine exporter. It does help if you've got the largest wine market in the world at your doorstep, but it does show that the United States have got the biggest opportunity to really shake things up on a global level. Argentina is the other one, a small exporter at this stage, but things are really starting to happen in Argentina in terms of the politics and really opening up to world economies. It won't happen in the next 1 or 2 years just because of those short crops that have been happening, but yeah, going forward, if they return to more normal levels, we'd expect to see them more active on the global wine market. So looking at Australia in a little bit more focus, we can look at the supply and demand balance, like we looked at a global level before. And the first remark here, looking at stocks in the orange line, is that stocks are at a much lower level than what they were in the dark days of huge oversupply, 2006 and beyond. The other note is that stocks are starting to increase slightly, so it is something to keep an eye on. But as mentioned, the global wine supply and demand situation is tightening at the moment, and at this stage, prices for Australian wine in the export markets and bulk markets are still increasing. So it looks like the Australia is handling this extra stock quite well. There are some differences between reds and whites. Naturally, red wine, you want to have a stocks to sales ratio, which is signified in the blue line, to be much higher than white wine. We know that it needs to be cellared, and generally speaking, although there is some debate about a healthy stocks to sales ratio, it's considered 1.5, give or take. 0.1 is quite a healthy level to be at. Sorry, the stocks to sales ratio is in the orange line. So we are climbing towards a bit of a higher level, but as mentioned, with China coming on stream and really demanding our red wines and global supply tightening, this should be manageable at this stage. If you look at whites in the orange line, stocks to sales ratio of 1.1, you can see it's much lower than the 1.45 that was recorded back in 2005-06. So yeah, sitting at a lower level, which is healthier. We want to sell white wines much sooner than what we would reds, and things are looking quite good for white wine at this point in terms of inventory levels. Looking at the 2017 crush, there is a potential for this to be a record crush, and it is the highest in the last decade. But as we know, prices did rise throughout the year, up on average 7%, and with the 5% increase in crush level as well, the value of that crush actually increased by 15% to $1.2 billion. So it's definitely a good indicator of the health of the Australian wine industry. Looking at the vineyard area, this data was last collected in 2015 by the ABS. So we're losing a little bit of clarity over what's going on in the vineyard. But as mentioned earlier as well, we've lost about 30,000 hectares. And if we're producing a record crop, it just means that yields are increasing significantly. Some of this originally was due to low pricing for wine grapes, and a bit of a natural variation in crops has helped out this year as well. As I said, pricing is firming, and this is due to a few different trends. And if we break this chart down into cool and warm areas, so the warm in the orange and cool in the blue, different axes, just so we can examine some of those trends in a little bit more detail. If we first look at the warm inland area, we can see that leading into 2013, there was some recovery in pricing, but due to that large Spanish crop, that really impacted at the Australian farm gate quite significantly. And as that large oversupply is fed through the system, you can see that pricing has begun to respond a little bit more. And given that Europe is looking like being quite short, you would expect that's quite a good sign for pricing going forward. Cool climate has been a little bit more steady in its climb. There's a few trends occurring here, and it's really that premiumisation in consumption that's occurring not just in Australia, but our key markets. There's also the China impact that's occurring. And also Barossa Valley is driving pricing north as well, especially with their large crops that gives them more weight in that average price. So again, production looking quite good compared to sales, and inventory going up just a little bit. If we look at sales for Australian wine, you can see domestic sales have been flat over the last decade, and exports has really been bubbling around. And if we go back even further, we know that the growth in the Australian wine industry was really export driven. This is one of the reasons why that Wine Australia is really looking to help exporters, because if we want to grow the pie for Australian wine, it really is going to come from export sales, with the domestic market not really moving anywhere significantly, and no real factor looking to come in to shift the ball on there. If we look at the export market where the real growth is occurring, if we break it down into price segments, you can see the $10 per litre and above segment is really driving that growth. And again, that's the impact of China. Looking at the bottled wine below $5 per litre, that's a few interesting trends occurring. South Australia is being used more often, growth at 10.5%, but also no regional claims at all, also growing quite strongly. This chart looks at pricing between bulk and bottled markets. In the green line, you can see the average price of bottled wine, and it's quite obvious to see that trend starting mid-2010 and a pretty steady onwards climb towards 2016. There has been some weakness in the average price over the last 5 months, and this is really the impact of Brexit coming through. The average price of bottled wine into the UK has declined in price, and as more Australian wine gets shipped in bottles to the UK, which is a lower price market, more of that wine in the mix is also lowering the average price. The average price of bulk wine is only really starting to respond over the last few years. But a lot of this is dictated by intra-company shipments. I don't usually read a great deal into the average price of bulk wine. this just highlights a bit of the growth in China and puts it into some perspective. So exports above $10 per litre at record levels at this stage. This is a little bit older, but exports above this level are now worth more than $600 million. And this is really driven by China and Hong Kong. But you can also see exports to the rest of the world have increased, but it's really the US that's dropped off. Encouragingly, though, exports above $10 to the USA have begun to turn around over the last 2 years as well. So some of those global supply and demand balances are really starting to impact on bulk wine prices. So this is some pricing data from cider. You can see that bulk prices for Shiraz, Cabernet and Pinot Gris have really moved over the last year. Different reasons between the two moves. Pinot Gris is selling quite well in USA and also Australia, and there's not a lot of supply out there. So domestic supply really driving some of those pricing, whereas Shiraz and Cabernet more driven by trends occurring in China and the extra demand being driven from there. So look at where Australia's key markets are. You can see that Australia is still the number one market for Australian wine, but it is flat. Europe still receiving a lot of the volume. So yeah, UK number one there, but yeah, bit of a tight market for the last 10 or so years, and Brexit was definitely not helping. And North America is still a significant market, but starting to decline, whereas Asia has really been the source of growth for the Australian wine industry. So we'll just look at some markets as we begin to wrap things up and examine them in a little bit more detail. The UK has been hit by Brexit and has been declining over the last year, and USA has also been increasing its the amount of wine being shipped into the country, up 9% in the year to March. But what you are seeing at the moment is that the value is starting to taper off. But this isn't really a sign of anything that's happening in market. More wine is being shipped in bulk to be bottled in market, and Australian sales are still quite healthy. As I said, probably numerous times now, China is really driving that growth, so up 50% during the year. And they're really key markets that are driving things. So just a little bit of an examination in the key markets. So Australia, obviously we're the dominant player in Australia, still quite patriot wine consumers in Australia. So we consume about 85% Australian wine and 15% imported. If you compare this to some of the other producers, so USA is at 30% imported wine consumption. France and Italy also have significant imported wine consumption, although more European focused. There are some really good signs in the white wine market that after 10 years of decline, Chardonnay has started to increase once more, and this has really come at the expense of Sauvignon Blanc. That's after huge growth coming from a pretty minor variety to the number one selling variety in the country. Growth rates are tapered off, and people are shifting their preferences from Chardonnay to Sauvignon Blanc. Interestingly, the premium market for Chardonnay has been strong for 4 or 5 years now, so it has been a bit of a precursor to this turnaround in the general category. We know that wine tourism has been strong, and cellar doors have been doing quite well, and direct to consumer is growing strongly, and more wineries are turning that way as the retail scene becomes more and more consolidated. So Coles and Woolies looking like controlling roughly 70% of that off-trade market. So just a bit of a look at some of those varieties that are growing quite well. Shiraz is the fastest growing variety and doing quite well in those higher segments. Rosé is something to look out for, growing quite strongly as a category, up maybe 30 or 40% from memory. Pinot Grigio doing well. Pinot Noir growing quite strongly off a smaller base, and Champagne also doing well. You can see the dry whites and cask wines really falling backwards, and the Cabernet blends as well not doing so well. So a quick look at the UK. As we know, Brexit has occurred, and the UK consumer continued to consume wine during this period. But as the pound depreciated, margins really become tight, and the retailers were looking to recoup some of that off of the producers. In a market that was already pretty low margin, it has been tough over there. Some segments have been doing well. For instance, the above $10 per litre category has been growing quite well off a lower base over the last few years. And one of the trends that we can attribute to that is the amount of independent wine retailers that are starting to open up again. As some of the big retailers in market reduce the amount of SKUs that they have on their shelves, consumers are looking elsewhere to find these wines that they once could get there. So just a bit of a demonstration on how Brexit has weakened and the associated weakened pound has hurt exports. If we look at total wine exports in the first 8 months of 15-16 compared to 16-17, you can see that exports are up overall, but it's really the rest of the world driving that, and UK down. And the change in pricing was even more pronounced. So if we look at bulk versus packaging, you can see that total average price of packaged wine in the world was up, and bulk was down slightly, but this is all driven by the UK. So bulk wine into UK down by 12 cents per litre, packaged wine down by 5 cents per litre, where the rest of the world was up quite strongly. So I'll just touch briefly on China. I gave a webinar on China the other week, which you may want to listen to if you want to get more information on the market. But yeah, really difficult market to understand, really fragmented, which means that information is difficult to really come by at the retail end. But we do know that more people are drinking more wine, and more often than not, that's going to be imported wine. So there's some really strong trends occurring there. The difference between the channels is quite stark. Online is really becoming a bigger share of the wine sales in China, and this is really hurting supermarkets in particular, as Chinese consumers can do price comparisons online. They're working out that they can get wine a lot cheaper through that channel. As a result, some of the grocers and hypermarkets are reducing the amount of SKUs and shelf space dedicated to wine, and sales are actually declining. So if you leverage to some of these channels, you could be seeing some stress in the business, whereas where if you're leveraged to the right channel, it will have better results there. So just a little bit of import data, just to back up some of the points. You can see the bottled table wine has been increasing quite strongly over the last 7 years there. And if you look at the bulk wine market, you can see that Chile has really benefited from the free trade agreement that they had in place over the last 7 years. So the a lot of this bulk wine will go into Chinese brands such as the Dynasties and Great Walls, etc., and it's really price dictated. As you can see, that other segment in 2012-13 was the biggest category, Argentina in this case, but really Chile has taken over since then, and there's a bit of a decline, as you can see, coming into 2017 as Argentina's had the short crop. USA, just to touch on briefly, the broad trends are that millennials are driving growth in the $15 to $25 per bottle segments, and Australia is really starting to take hold there, but it's really coming from a low base. They've got different taste profiles to their parents and looking for something a little bit different, and we know of plenty of cases where wineries have changed the variety, but nothing else, and it's resulted in good success. Apothic Zinfandel went to a Apothic Red Blend, started selling a lot more wine. So really something to think about when in the USA, that different varieties are definitely having different outcomes. Shiraz has been declining quite significantly over the last decade, but higher price Shiraz is starting to come back, so it's a good sign for Australia. But Italy has really been the main benefiter of all of this action in the USA wine market, so really becoming the number one import source in the country over the last few years. So just to summarise some of that, lower global supplies helped improve bulk wine pricing, and this has really been before the 2017 crop has been coming in and more information known about it. So we should expect that one to keep on going away the way it is. Grape pricing is a bit of a lagging indicator if we're talking about Australian wine grape growers. So although some of these trends have been improving over the last few years, it has taken a while for those prices to really respond. And Brexit has really offset some of the positive effect of the free trade agreement in China. And that China story is strong and it's real. But everyone does know that there is a good opportunity there, so competition will be fierce. And premium wine markets are really growing strongly in all of our key markets. And Australian wine in the US is still losing share, but some of that premium wine is starting to lead the charge, and hopefully it'll lead the category in general upwards. So that's the world wine market in 40 minutes. It is quite brief, but if you've got any questions, I'm happy to take some now.
Thanks for that, Mark. And as Mark's just indicated, we will roll straight to a Q&A from here. So if you do have any questions, please start sending them through. Mark will stick around and answer any questions you've got. Just a quick reminder for anyone that's not familiar, if you want to ask a question, just open the Q&A section of the webinar and type your question in. So we do have one question already. It comes from Jason. I think it's in reference to, perhaps midway through your presentation there, Mark, and he's asked, in the supply and demand slide, how does the 2017 production and 2016 production figures look when applying this in the charts?
So, yeah,
it's a little bit early to determine at this point, but a few back of the envelope figures, if Europe or those three countries are producing about 10 billion litres of wine and they're down 10%, then that's going to be 1 billion litres, and you can see this gap is about 1.5. So if they're down 10%, you'd think that we're getting pretty close to the demand line. If they're down 20%, which is a possibility, maybe we fall under that. So if this plays out, I think it is quite significant.
Okay, thanks for that, Mark. Hopefully that's answered your question there, Jason, and if not, please send through a follow-up question. Look, it looks like that's it with regard to the Q&A side of things for the time being. Before we finish up, did you... Okay, we just had a comment here from Jason. Yeah, did you want to make any further comments on that? So yeah, I think we'll wrap up. Mark, did you want to make any final comments before we finish the session?
Yeah, if you want anything cleared up, or any of this information that you've seen has interested you in any way, feel free to get onto Wine Australia or me directly. We do run an info line that any stakeholder can access. So yeah, I'd encourage you to get on to our website, get access to the information, and contact us if you need any more.
Okay, thanks for your final comments there, Mark. So I'd like to thank Mark for coming in and providing us an interesting and very comprehensive update surrounding some of these trends and data associated with these trends. I'd also like to thank you, the audience, for being involved and taking part in today's session. Attendees will receive a follow-up email, and that email will contain a link to the recording of this session. There'll also be a survey in that email. Now, the next AWRI webinar is on the 14th of September with the University of Adelaide's Dr. Roberta Crouch providing results from a recent study identifying the role Australia's image plays in a number of established and emerging export markets. If you'd like to register for this session, please visit the AWRI website. That's all we have for today. Thank you again for logging in, and I look forward to seeing you at the next AWRI webinar.